Hey, did you fail audit? This is part 2. I'm Darius Clark, and in part 1 we said if you failed audit, you probably don't know the difference between the completeness assertion and the existence assertion. So if that applies to you and you don't know the difference between those two, go back to part 1 and watch that video. Because in part 2 we're going to talk about the difference between the existence assertion and the valuation assertion. And this really applies to assets. With assets, the client asserts that all assets that were recorded at year-end really did exist at the balance sheet date. That's the existence assertion, right? The client asserts that all assets that were recorded at year-end really did exist at the balance sheet date, like accounts receivable. Any receivables on the balance sheet, the client's asserting that they represent real customers. None are fake. With valuation assertion, the client asserts that the asset's properly valued. So whenever the question asks about an asset and which assertion applies, how do you know whether the answer is existence or valuation? Because if you failed audit, the CPA exam probably asked you a question like, the auditor sends out an accounts receivable confirmation. Is that to test existence or to test valuation, or both? And the answer would be existence. If the auditor sends out an accounts receivable confirmation, that's to test existence, not valuation. Why? Because with existence, the auditor is concerned with the amount of receivable before the allowance for doubtful accounts. So they want to know about the gross amount of the receivable. If the auditor is testing existence, it's the gross amount. Whenever the auditor is concerned with the gross amount of the asset, the answer to which assertion applies is existence, not valuation. So when is valuation the correct answer? With valuation, the client asserts that the asset is properly valued. For example, accounts receivable is valued net of the allowance for doubtful accounts, which is the contra asset. So that means whenever the auditor is gathering evidence regarding the net amount of the asset, then the answer is valuation assertion. Because the client asserts that the asset's properly valued. And how is accounts receivable valued? It's valued net of the allowance for doubtful accounts. What about other assets? How are they valued? Well, equipment is valued net of accumulated depreciation. So if the question on the exam said the auditor is gathering evidence with regard to the contra asset, like accumulated depreciation of equipment or allowance for doubtful accounts with receivables, then the answer would be the valuation assertion is what the auditor is testing, not existence. Because valuation applies to the net amount. Existence applies to the gross amount of the asset. What about inventory? How's inventory valued? It's valued net of any reserve for obsolescence. So here's the big note to take so far. You'll know the answer is valuation assertion and not existence if the auditor is gathering evidence regarding the contra asset. What are some contra assets they might ask you about? Allowance for doubtful accounts. So if the auditor is gathering evidence with regard to accounts receivable and is looking at the aging schedule, then they're trying to determine the allowance for doubtful accounts. The assertion that applies, valuation. Because anytime the auditor is gathering evidence regarding the contra asset, the answer to what assertion applies is valuation and not existence. So if you failed audit, you might have missed this question on the exam. The auditor is gathering evidence regarding the accumulated depreciation of fixed assets. What assertion is being impacted? Well, they're showing you accumulated depreciation. That's a contra asset. Whenever the auditor is gathering evidence regarding the contra asset, the answer to what assertion applies to that asset? Valuation. You got it, letter B. Not existence. Because with existence, the auditor would be concerned about the gross amount of the fixed assets, not the net amount. How do you know the auditor is concerned with the net amount here in this question? Because it says the auditor is gathering evidence regarding the accumulated depreciation. That's the contra asset account. And how are fixed assets valued? They're valued net of the accumulated depreciation. To gather evidence regarding existence of fixed assets, what would the auditor do? Well, here's what the auditor would do. Find some fixed assets recorded on the balance sheet and go looking for them. See if they're still on the factory floor. Right? We're talking about property, plant, and equipment. We see it on the balance sheet. It's recorded. With existence, we would want to know, hey, is that equipment still on hand, or was it retired and never taken off the books? That would be an existence concern, because now we're concerned about the gross amount of the fixed asset. But if we're looking at the accumulated depreciation, that means we're concerned with the net amount, the valuation assertion. So the answer is B to this question about accumulated depreciation of fixed assets, because the auditor is focusing on the accumulated depreciation of the fixed assets. And whenever the auditor is focusing on the contra asset, what do you know? The answer to which assertion applies is valuation of the asset, not existence of the asset. How about this? The auditor is recalculating the aging schedule in order to gather evidence regarding which of the following assertions relating to accounts receivable. Okay, recalculating the aging schedule is how we determine the allowance for doubtful accounts ending balance. Because whatever the aging schedule is, that's going to be your allowance ending balance, and the allowance is the contra asset. So if we're focusing on the contra asset, the answer to what assertion applies to accounts receivable? Valuation. Letter A, not existence. So A is correct. The aging schedule determines the ending balance and the allowance for doubtful accounts, and that's the contra asset, isn't it? And whenever the auditor is focusing on the contra asset, the answer to what assertion applies is valuation, not existence. How about this? The auditor is sending out accounts receivable confirmations to a sample of client customers in order to gather evidence regarding which of the following assertions. Okay, why do we send out these confirmations? Because we want to know whether these customers are real or fake. That's an existence concern of ours. So the answer is B, existence. See, as long as the customer responds to the auditor's confirmation of receivables, this is evidence that the customer exists at year end. They're a real customer. It was a valid transaction. The reason valuation is not also being tested with a confirmation is because valuation deals with how much might be collected, right? The net amount owed. The auditor is not asking the customer how much they're going to pay, or even when they're going to pay, or even if they're ever going to pay. Confirmations only indicate that the debt is real, not when the debt might be paid. So that's why the answer to accounts receivable confirmation is always existence, not valuation. How about this one? When auditing accounts receivable, the auditor is gathering evidence with regard to the credit granting policies of the company. Which assertion applies? Why don't you leave me a message on this video letting me know what you think the answer is and why. Leave me a comment on this YouTube video. Let me know what you think the answer is.
Is passing the CPA exam harder than doing a backflip? Well, the answer is it's all about preparation.
Hi, I'm Darius Clark, and here at I-75 CPA Review, I'm going to put you on the right road. So when you go to take FAR, Audit, BEC, and Reg, you're going to have so much confidence, you're going to be like this guy doing a backflip. So go to CPAexamtutoring.com and take I-75 to your next pass. Because the only thing more painful than failing the CPA exam is failing a backflip. So for just $109 a month, become a monthly subscriber to I-75 CPA Review and get all 4 parts for the same subscription.